Hey guys, it's Max. How's everyone doing today? I have what I hope is going to be a good one for you guys. I even made a new spreadsheet for you. So it's in Excel. Okay, so here we go. Okay, first of all, let's talk about Polymarket. Polymarket, last time I checked, it was 60 to 39. Last time I checked, now it's 39.9. I don't know what this is. I think this may be an average or something, or maybe that's the latest print. Okay, presidency. Okay, well, Kamala's bouncing a little bit, but that's all right. That's the good thing about spreadsheets. I can just change her price. I already have 30 on her, 39 on her price. She was 38 yesterday. I'll change it to 40 because it looks like it's just about 40. Okay, so let's see what Trump is. We need to get this done. Trump's still 55 at this other one. And he's 60 at this one. Okay, so I'm trying to show you guys arbitrage. You know, arbitrage in finance, usually it's done by a bank, and they have offices in New York, and they also have offices in Europe and probably Asia. Lots of times maybe they sell, who knows? They do usually things with currencies. They sell yen one place, and they use it to borrow dollars another place, and they make money on the difference. That's the carry trade. But there's all kinds of ways that banks will lock in a profit on an asset if there's the slightest price discrepancy. If there's, a bank or a big institution can do it. Okay, I think that the crypto bros and the Trump fans are mainly betting in Polymarket, so I think it's making Kamala's odds too low. Now, I'm not saying I'm for Kamala, or I'm not saying anything that it's good, but I'm saying Polymarket is undervaluing her, in my opinion, but they're overvaluing Trump. But the other service, just from a relative basis, is overvaluing her and undervaluing Trump. Okay, yes, okay, that's right, on a relative basis. So here's what we would do. So I even made a spreadsheet to show how it works. All right, so let's see. Okay, so here's the odds. Kamala's 40 at Polymarket, Trump 60. I predicted it's 47 to 55. We're going to use the ones I put in green because the odds are more favorable for each candidate there. So this video is dedicated to my grandfather. He passed away probably, I think, like 2005 or something, 2006. It's been almost 20 years probably. However, or maybe it has been 20 years. However, he was a big Republican, and, he would be mad if he knew I was thinking about betting on Kamala. I didn't say voting for Kamala. I said even betting on her. Okay, so let's see. Let's look at some alternatives here. So here's the first alternative that came to mind. Okay, well, let's see. The odds have changed a little bit. Let's do... Okay, let's do it like this way. Hang on just a second while I mess with this ratio. There it is. Boy, that's perfect. I hit it perfect. Okay, the UPS guy's here. Jax is going to start barking. Let me probably pause this real quick. Okay, well, he's gone now, but the dogs are maybe going to bark a little bit. Okay, so here's what we have. Here is the way. In horse racing, this is called a Dutch bet, I believe. But a Dutch bet is where you have, let's say you have a horse that's 5-1. His odds are 5-1, and you have another horse that's 10-1. Okay, you can bet $10 on the horse that's 5-1 and $5 on the horse that's 10-1, and you win an equal amount of money no matter which one wins on either one of them. It's called a Dutch bet. So the way to Dutch bet the presidential election, this only works if there's a discrepancy in the odds on the presidential election. This shouldn't work. If the markets were efficient, the price of the discrepancy shouldn't exist. We're trying to exploit an inefficiency. This is the same thing that QDTE and triple QY and all the Qs, all the funds that sell daily options or weekly or monthlies for that matter. Those are exploiting imbalances in the option market. We're trying to exploit an imbalance in the presidential election prediction market. Okay, so 72 on Kamala. Sorry, Grandpa, but you risk 100 on Trump. Okay, so if you do that, if Kamala wins, it's $109 profit. Subtract your $72, or I'm sorry, you subtract the $100 you bet on Trump. That's a $9 profit. Comes to 6% annualized, or about 70%, or it comes to 6%, which would be a lot more annualized, but obviously, because it's less than a month. I assumed it was a month. So really it's more than, but since it's 3 weeks, it's more like 8 or 9% probably. It's huge. Profit if Trump wins. Okay, so you lose the 72 on Kamala, but if you bet 100 on him and you use predicted, because he's overvalued at Poly market relative to her price. So that's a $9 profit, so 6%. So either way, so that's the way, that would be the way to balance it. So of course that's, and it's because I'm not supposed to change that. That number comes from somewhere else. I need to figure out where that number comes from. Oh my gosh. All right. Well, that's fine. Let's just leave it. You have to, if you want to win more than $6, which I'm sure you do, you have to multiply it yourself. A bet of, you could bet, and I'm not recommending this, my God, but because it would take you, you'd only win $60, but you could bet 720 on her and 1,000 on him. It'd be 1,700 to win $60. I mean, yeah, it's 5%, 6%, and you could keep adding zeros to get wherever you want. All right. Well, so here's what I was going to show. So you can, in racing, you don't always have to make the Dutch bet to be equal. You can Dutch bet 2 horses where you think one horse has more of a shot. So like if I think Trump has more of a shot in this race, but I still want to hedge myself, and this was a horse race, what I would do is I would bet a little less on this side. Now, but see, if I do it that way, then it's a loss if Kamala wins. I don't want that. I want to bet just enough on her to break even. Like I say, so my grandfather doesn't come back and whoop my ass. Okay, that's what it would take. That's the hedge right there. So you could do 67 on Kamala or 670. You could do 100 on Trump or 1,000. But if Trump won, it's a $14 profit. It may not seem like a lot, but it's 9%. So, it'd be $140 if you're willing to risk $1,600. I mean, yeah, it's, I like my other trade better, but this is a way to do it. So anyway, I hope you guys enjoyed that. This is one way to do that. I can share the spreadsheet with you, but I need to make it better first. So let me make it better. All right. Well, let's look at the one other way. I think this is a better way to play the election. I think options are giving us a better gamble or a more interesting gamble than maybe the prediction markets are. And I have no idea. I'm just talking. I'm not saying who's the better candidate, who's going to win, who's going to lose. I'm just saying Kamala's odds are too low at predicted relative to Trump's odds. That's all. So we're just trying to exploit that difference. Okay, well, so let's look here. So this trade's from this morning. I call it the cluster F. It's a real simple trade. If you guys don't do any of these calendars are great trades when you're expecting volatility and you want to put the short leg in the week that you're expecting it. And this is November 15th, which is the week after the election. And then you want to make the long leg of the calendar. It expires afterwards sometime when maybe you aren't expecting it. These are great earnings trades, but I'm modifying an earnings trade to make it an election trade. And what you hope for is you hope for even more volatility running into the election. And what do you want to bet we get it? It'll make the profit and loss graph even much more attractive. But the max loss in this trade's $343 or whatever. I shared it in the comments this morning. I don't know if anyone has it on. These are simple trades. There's a ton of liquidity on these options. Look, there's 275 volume, 30,000 open. The bid ask is 25 cents, which seems high, but for a stock option, it's really not. You shouldn't have any problem getting between the bid and the offer. But yeah, what you're really playing for, it's a way to play for heightened volatility. You're playing for heightened volatility, and the price of the stock can't collapse. It can't go under. You want the heightened volatility and the stock to at least stay above 15 or something. The stock runs under 15. Even if you get heightened volatility, that's a boost. It probably you're just going to be a loser. But if that happens, it probably means Kamala won. So I think it's better to play this trade right here, and then figure out how much to play on Kamala. So if a guy played this trade, it's about a $345 debit. So that's the max you can lose. If Kamala wins, God forbid. I mean, I didn't say that, sis. I'm just trolling my sister. She doesn't watch anyway, so what difference does it make? But she's a big liberal. I mean, my gosh, she's a beautiful woman, though. I mean, I'm not saying anything bad about her, but all right. You just don't want the stock price to drop. If this thing goes to zero or goes under 15, it's probably going to be because Kamala pulled back ahead in the polls and maybe even, won or something, like I say, God forbid. But so that's fine. So if that happens, this $345 is gone. I'm saying as long as Trump is still in the picture, even if he doesn't win, as long as it's close, probably especially if it's close, which it's going to be, I expect the volatility to go higher in front of the election. I bet you he challenges the results after the election if he doesn't win, and they'll probably challenge the results if they don't win. So in any event, probably be contested. So this expires the week after the election. So if we get the little boost in volatility, and even if the price doesn't move, this trade's $1,000 winner. Well, that's an expiration, but let's hold it till like the Friday after the election. If you get the boost in volatility, this trade's a $500 winner. You just can't have it go under $13 as long as it's above, So all we have to do now, so this is a better way to play Trump. All we have to do now is figure out how much Kamala a person would need to hedge this. Okay, so this turns into $345 or $344 loser. So all we have to do is figure out how to win $344 on Kamala. Like I say, God forbid. I didn't make a spreadsheet for this, but to make $344 on her, we can use the same. Oh no, it's going to mess it up, isn't it? It's going to mess it up. Anyway, she pays 1.5. So to win 344 on her, you need to bet like 220, something like that, 250. I don't know. As little as possible, but so you bet 250 on her. She wins. It pays off enough to cover your losing spread here, which is $345. Most you can lose is what you put into it. Okay, so yeah, I say 250. So 250 on her, and you'll get your money back if she wins. But if Trump wins, all you got to cover is 250. This curve right here, it figures the net profit. So you're up 557 on this position, but you would have to cover the 250. You'd have to cover her 250. So you'd be up 250, you'd be up 300 right there, 307. You'd have to really, if you got the volatility pop, you would just want the price to be between 20. You're just betting on the price of at least 20. And hopefully higher than 20. And volatility as high as possible. I don't see any limit in how. I wouldn't be surprised if volatility went. There's no telling. I wouldn't be surprised if this short squeezed at the same time. But, you know, you never know. There's no guarantees in life, and it'd be possible that she could lose and the stock could still go down. I mean, that you have to be prepared for the that you could possibly lose both. All right. Well, I think that's all. I'm going to bore you with the election. Let's look, though, at the ULTY trades just real quick. See how Jay's ULTY trades are turning out. He's $1 million ahead on this one. So this is a Netflix trade. And this when does this expire? Does this expire? This doesn't expire until next week. So it has a funny profit loss graph at expiration. But see, Jay's secret is he's not going to hold it till expiration. He'll probably roll it sometime around here. So that's what his effective profit loss graph is. Basically like stock. Unlimited upside, unlimited downside, just like stock. So, there's no excuse anymore. Hey, this thing's capped. I mean, it is still partially capped. But when they apply this strategy right, they've essentially uncapped it in a sense. Anyway, great job on ULTY. But like I always say, the market's cooperating with them. The market still needs to move wherever the option spread wants it to move. I mean, the option strategy doesn't control what the market does, obviously. Okay, so this one is a cool spread. This is a calendar where they use the proceeds from a covered call to buy a put. If you look here, you can see the profit loss graph on the whole trade. They just have $1 million risk, no matter what happens. If they didn't do it this way, and this is the old ULTY, they have, $4 million risk. So great job. I like that I love that they're doing all this stuff. I wish they had callers on every stock. They should have callers on every one of them. Right now, they just have, from what I can tell, 3 or 4 of these stocks with exotic positions. The rest of them appear to just have covered calls. And that's fine. There's nothing wrong with the covered calls. They a really deep out of the money covered call, which is what they do, is a good trade also. I just don't like the unlimited downside. All right. So now the kind of the bad news in the bunch is it says it's down $2.5 million. The caveat is I don't have the exact cost basis of the shares. But I was mainly trying to study the outcome of the option strategy. But in any event, this is an interesting strategy. I'll talk more about some other time, but this is a combination of a bull put spread plus shares. Anyway, so it's essentially double long. So it's a double long bet. So you want price to go up. Well, price hasn't cooperated. Price is down. So this one's going to be a loser, but that happens. Oh, well. Let's look at the market real quick. And I think ULTY's down on the day also. Looks like the S&P's up a little bit, kind of grinding sideways to up. Oh, ULTY's up. All right. ULTY's up. ULTY has a killer trade in there too. That Netflix trade is murdering it. And they have other trades that are killing it too. I just showed you the 3 that have more exotic type option strategies. Anyway, all right. So you got some bonus ULTY content plus political content. It's 2:00 here in Hill Country. I'm going to post this in case anyone wants to do these trades before the market closes. I'll post it, and I'll post links to the trades I talked about. All right. You guys have a good one.